So I'm Andy Hill, Head of Global Secondary Markets at ICMA, and I'm joined by David Camara, Executive Director, Market Structure and Transition at Goldman Sachs. David has been co-chair of our Secondary Market Practices Committee for some time. Welcome, David. You have been involved with the SMPC and the various secondary market work streams for a number of years now. You've been co-chair for several years. How have you seen ICMA's secondary market forum evolve over that time and engagement with members?
Thanks for the intro, Andy. So yes, I think this has been a very special year, and the SMPC has grown this year. COVID has been the main topic, unfortunately, and when everything went to screens at the beginning of 2020, SMPC helped connect people to people more than ever, I feel. So the role of SMPC in secondary market has been even more prevalent and necessary this year, where we all went home, we all had to work from screens. That connectivity, that value add, connecting to our peers, connecting to buy sides, and talking about subjects that were of concern for all of us was pretty key. And there's a bunch of things we can talk about, like the COVID or transparency or other regulatory topics. But I think it's a very dynamic forum, and I think ICMA are taking it really to the next level, which is very positive.
That's great to hear. And as you mentioned, it's very impossible to ignore COVID when we look back on the last 12 months. Could you elaborate a little bit on how you saw ICMA and the SMPC playing a role in supporting members during that time?
Yeah, I mean, the first thing is the meetings themselves, right? That provided this forum for connectivity where like everyone was connecting less. So I think that's the main topic. But there was also a couple of reports, one specifically on the functioning of the market around this period of the peak of the crisis, and another one, your report on secondary market, which is like the third instance of the report, actually, Time to Act, I think it was called, around March, which was very timely last year. These type of reports on the bond functioning, I think, are key, because they help the market understand that fixed income, the way fixed income works. And as we all know, like sometimes regulators tend to want to compare equities to fixed income a lot. And I think all of this work from ICMA, providing reports on how fixed income is very much balance sheet driven, how the liquidity is provided, are like all of these are key pieces of understanding of the fixed income market, and help regulators understand that they're very different animals and that equity and fixed income have to be tackled differently. So yeah, that was a very positive interaction as well.
You also touch on a really good point there about the difference between bond markets and equity markets. And I'd like to ask you about two work streams that ICMA has been involved in, very much at the heart of market structure and how bond markets work. And one is transparency. The other one is CSDR mandatory buy-ins. I'll come back to that. But ICMA has been doing some very interesting work on bond market transparency. I wonder if you could say a few words about that.
Yeah, so I think the main topic there has been the consolidated tape report, and I think the result there was that bond consolidated tape was almost off the agenda of regulators for a while, and I think ICMA have helped bring it back to the agenda. And we're now hearing from the Commission that they will press on having a bond consolidated tape. I think I agree with ICMA there that the truth is there's a lot of transparency coming into the market because of MiFID and other regulations, but the truth is that transparency is not available, is not accessible, and the first step for that to be accessible is actually creating a common place or a CTP. So that has been a great work done by you, by Liz, by the committee, and also responding. The CT report is part of it, but also responding to a number of consultations that are plentiful this year, and making sure we responded with ICMA and with everyone in mind, buy side and sell side. So I think that has been a great job. The complexity around redefining transparency is something that we're currently talking about as well, and that is, I mean, as I say, I think the first bit is creating a CTP, and then redefining or simplifying the transparency regime is also something ICMA is very involved in. So, so I'm very happy with that work, and I think you guys go from the very high level, getting consensus, to the detail, which is what matters here.
The other initiative that I was going to ask you about, CSDR mandatory buy-ins. Now, until maybe a year or two ago, this was very much discussed within operations working groups. It's suddenly become one of the hot topics, if not the hot topic, for both sell side and buy side traders. Why do you think this is, and what do you think ICMA can continue to do?
Yeah, I know these regs, I mean, has a big operational component, but I think the job ICMA has done is trying to connect the dots between the operational component and the front office component of the regulation. And you're right, this has been there for a while. It has been sort of dormant for the last year because it was postponed, but we need to focus on it now. And the truth is, while I think the market welcomes more discipline and better settlements framework, and we all acknowledge that there may be a problem, especially in the more illiquid securities, and especially with periods of volatility. At the same time, there are some components of this regulation that are not straightforward, like there was no pass-on mechanism, the repapering with clients, the having to appoint a buying agent, and there's a bunch of other items that are really worrying the trading community now. And I think ICMA has done a good job at trying to list those items and elaborate advocacy around those, and even create some, or trying to measure the potential impact of a CSDR go live. This, I mean, it looks like it will go live in 2022, and I think there's still a lot more of implementation work to do. And I think we still need to be on top of this particular regulation and, you know, work on it. The time is very tight. So I would welcome more engagement on this, maybe for future meetings.
No, definitely. I think this is going to keep us busy probably up until February and beyond. Now, one of the flagship work streams under the SMPC is the Electronic Trading Council, and I'm wearing your market structure hats. That must be something where you've seen a great deal of engagement. I wonder if you could just tell us a little bit about the work that's being done there.
Yeah, I mean, Liz has done a great job at trying to put together the buy and the sell side there, and it's a very tricky topic, right? And I think one of the latest products of that has been the guidelines of price dissemination or price distribution. It's a very controversial topic, and it's been out there for a while. I mean, since I was in the sales and trading unit, like the access has been like probably the core as to how the market trades. And I think redefining some guidelines around what's an axe, what's a run, has been controversial, but has been very positive. And the way and the product of it is just a small document. But the truth is, I think the debate it has created and the level of engagement that ETC has produced is actually what is really positive. It was very honest. It was very loud. A lot of people expressed their opinions in an open and honest way, which I think is exactly what trade associations like ICMA bring into the market, right? That openness and that honesty. So I was very pleased with that part of the work this year, and I hope we can continue in that vein in the next year as well.
And I think it's a good example as well of ICMA bringing the market together to outline best practice and in line with our market rules and recommendations. Finally, I wonder if you could maybe just say a few words about, I mean, a lot of the things we talked about are very European focused, but maybe we could finish up by talking about how we're expanding our work into Asia and some of the work we're doing there.
Yeah, sure. So I think, I mean, in terms of expansion, Asia is APAC in general is an obvious region. The volumes there are just gigantic, right? And I think that also the market structure there has a lot of evolution. We've seen with Bond Connect and other initiatives. So I think, I mean, ICMA has published a couple of papers there, one for inshore and onshore, inshore and offshore, sorry, China, and another one for international markets, I think in Asia. And the more we can help the APAC market develop, and there's a lot to do there, both in terms of volume and I guess also in terms of innovation happening, right? Sometimes it is not necessarily the last market that gets the most innovation, but at the same time, I do think that like the market there is moving pretty quickly. So it may go from like a very manual market like we had in Europe 10 years ago to a very automated market in a very small period of time, right? In 1 year or 2 years. So I think that's one to watch, definitely. And the reports from ICMA are worth reading in that aspect. Yeah, and all in, it's been a busy year, as you see, Andy. Like I think ICMA didn't stop this year, and I'm very keen to keep trying to help in the next year.
David, thank you for sharing your thoughts and insights on the SMPC and our secondary market work, and thank you for your continued stewardship and leadership as co-chair of the SMPC.
Thanks, Andy.